This conference will now be recorded.
Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 8:38 p.m. on April 13th, 2020. This is a strategic webinar, which we normally do on Sunday evenings, but due to Easter Sunday and other religious holidays, we decided to do it today. This session will be recorded, uploaded to our Clueless A Trading YouTube channel for viewing by all of the members and free trial subscribers and anyone out there with the internet connection. Certainly pass the word around, and anyone can listen to it at their own time. Full disclosure, this is purely for financial education and not for any solicitation or advice. Okay. So let's get straight to the heart of the matter here. We are entering a very powerful period of the market, and that has to do with first quarter earnings and second quarter guidance. First quarter ended on March 31st, 2020, just a couple of days ago, a little bit more than a week ago, 2 weeks ago. And now we're going to hear from a lot of companies as to the impact on their businesses and what they're looking forward going into the remainder of the year, the second quarter and further out. So on that note, let us begin. We'll take Q&A later. We'll look at a bunch of stocks. First, I'm going to barrel through, as I normally do, through a bunch of quick charts to keep everyone grounded in what the reality of the situation is and not the emotional freakishness that we all have to deal with. And that's why we look at tech. Well, that's why we trade charts, and then we look at charts to get an actual grounding as to what is exactly happening with the stock markets. On that note, a couple of broad points here. Number one, earnings season kicks off tomorrow with a bunch of big banks, which we're going to look at. I believe JP Morgan and stuff. I didn't get a chance to get into them later on today. I normally do. It was a busy day. We had a lot of big winners today, as you all know. Certainly review the real-time Twitter feed. We had big winners even when the market was down 500 some points. Huge winners. Netflix running directly off the gate, the 400 calls. April 17th, 400 calls that I told people to buy last week at like $1, $2. Those things were up to almost $9. So they were up almost 900, close to 850%. You know, take a crack at that one, right? I'm sure some members were in it. I was in it, and it's fantastic. We had Tesla, which took off like a rocket. Told people to buy it when the stock was 585. Stock closed at 675. Calls were up more than 700% from Friday. I'm sorry, 600% from Friday. We were not in Apple. We got into Apple later on today, and right after I told people to buy Apple, it started shooting higher. We're up about 20 to 30% on Apple just since I alerted this afternoon. Shopify, another monster that I've highlighted many, many times, up a gazillion points. Average ROI on Shopify is 120 to 140% on each series of calls. Last I asked people to buy with the 450 calls, they were up 120%. These are all validated. You can take a look at it on your own. And of course, look at the charts and stuff that I put out there. I went in and looped into the 470 calls, which are only 16 points away from here. Stock went to 453, closed at 453. Now, this is what you call power. And I've mentioned it quite a few times to all of you, that these are the monsters that got clobbered. I shouldn't say for no reason. There were some valid reasons. There was mass wholesale selling by hedge funds. But these are the things that you want to buy when they are falling apart. Many of you did, and many of you are extremely happy because I hear from you guys. I hear from you guys. So that's it. And there's a lot of bargains like that still out there. And my job is to try to highlight as many of them as possible. And your job as traders, excuse me, is to buy them. Whether it's one call, whether it's 5 calls, whether it's 10 calls, whatever you can afford, you guys need to be involved. So number one, earnings season. Number two, we are going to be hearing more about the coronavirus stuff, whether there's more of a flare-up. That's another danger. We are going to hear more from the oil people, whether they're going to cut oil prices, cut oil production further. We are going to hear about, those are the main things. Those are the main things. And then, of course, we're going to have the political conflict between state governments and President Trump as to when to reopen the US economy. So that's going to be another factor that's going to create volatility in the markets. So you got to keep all these things in mind as you're trading. But at the same time, the thing is you have to be selective about the stocks that you buy. Not every stock that we buy is going to work out immediately. But I would say a good 70 to 80%, if not more, of the stocks that I select and put out there as suggestions do work out at one time or another. The question is how you manage your positions. The question is what time frame you have. Do you have 3 days left, or do you have 2 weeks left, or at least a week left for the expiration? Don't go too far out with the expirations, because it doesn't make any sense to pay up higher premium because we don't know what's going to happen 3 weeks from now, to be honest with you, right? So saying all that, suppress your emotional demons as much as you can, and the only way to do it is not by talking to yourself. Well, that's part of it, because that doesn't do much, because the demons in your head are more powerful than you are. Is to basically focus on the charts. That is the vaccine that will help you be a non-emotional trader, or at least a less emotional trader. And what I'm saying is words of wisdom that I've learned many years, and I'm an example of that, guys. Okay, so just keep that in mind. You cannot just wake up one morning and say, oh, I'm going to be a real non-emotional tactical trader. No, it doesn't work like that. You have to focus on the charts. You have to understand the messaging that's coming out of it. Learn. Many of you have signed up for the advanced coaching sessions. Many of you have gone through the new member introductory videos, and you're starting to see why this system works. Because we do have a system. I just don't do things randomly. So saying all that, let's dive directly into the charts here. Make good use of time. And thank you for attending. So first of all, this is the long-term chart that I keep on showing. Very, very important to keep the perspective. And the long-term chart starts all the way in 2007. So changed it to a different color. The long-term chart starts off all the way in 2007, when you were 13 years younger, all of you, and me too. And then the bottom, 2009, and this is where we are right now. We retested the lower end of the channel. We slipped below it towards the 2178 level on the S&P 500 and the 2200 level, and we bounced back hard. This is where we are right now. Each candle is 1 month. That's a lot. That's a lot. That's 20 trading days. That's 20 trading days where your mind is going to be made into mush, and you're going to be thrown out like a roller coaster back and forth if you don't have the tactical discipline. Facts, not fiction. Okay, you know that. So each candle is 1 month. So far, looking good. We have the stochastics turning, as we like to say. The worm has turned. Okay, the worm has turned, and that's your full stochastics starting to turn. This is still somewhat negative, the MACD, because it's still sliding down. We would like to see the MACD start to turn up, in which case we're going to be a lot higher. So what you want to do in the case of being a trader or an investor, you want to buy the point of maximum pain based on the charts, not because the market's down 700. Oh, let's go buy it. No. It doesn't work like that. Market can be down 700 and fall another 700. We've gone through it. So you need to look at the tactical charts, both on the long term and the short term, make a determination, and you buy stocks. And you look at the stock charts too. Because without a visual roadmap, you are driving blind. And that's what most traders do, and they blow up. Even when they have a great entry, they're still driving blind. You cannot drive blind, because this is a supercharged machine run by algorithmic high-frequency trading programs, which are driving at 240 miles an hour, right? Try jumping into a Lamborghini Huracan Performante and then try to drive that. You're going to be around the lamppost in 2 seconds, all right? This is not like driving a little VW. So this is what the markets are that we're dealing with. Facts, not fiction, ladies and gentlemen. Just want you guys to understand that. Saying all that, and you got to keep your hands on the wheel. So far everything's looking good. So what is this telling us? That the monthly picture going into the month of May still looks pretty good. Still looks pretty good. I don't think we're going to hit the top of the rung, make a new high. Maybe that comes the latter part of the year when things have really, started to calm down. But at least for now, as traders, we look for opportunities. We don't sit there and think what's going to happen 3 months from now. Am I right or wrong? Nino, Ray, Alan? Yeah. So we don't want to know what's happening every 5 minutes, because that's going to drive us crazy and make us mush. But we do want to know what's happening over the next 5 days, not the next 5 months, because that's not our business, to be honest with you. even though I will show charts which will show the longer term picture, which still looks good. Okay, let's move on. The next one would be the weekly chart. From a technical standpoint, uptrend intact. I mentioned this, and I'm going to explain that to you again because we have some new people here. Alan, are you connected? Can you hear us? Keep on asking that. What are you?
He's on the chat. He said he's here,
yeah,
but no mic.
Okay, that's fine. As long as you can hear us, that's fine. Okay, good. So this one is your weekly chart. Very, very important. This is giving us a little bit. We were zoomed out, right, when we were looking at the monthly. Here, each candle is 1 week. This was the cataclysmic drop from the top. We went from a bull market, raging bull market that I've called many, many, many months ago to a raging bear market, and now we're back in the bull. How funny is that, right? So people say, oh, yeah, market's never going up. Dude, we just got back 52%, called the Fib 50 off the drop. So what are you talking about? The market's not going up. The market already went up. And for us, a lot of us, the market went up a lot. So sitting there, twiddling your thumbs and playing a sad violin is not going to do anything for anybody. Okay, you got to trade the levels. Market went up a lot. So saying all that, what we like to see is, as I've mentioned before, the MACD. We do see the MACD histogram, which is in the don't have the histogram things here, just have the shaded green. I like it. It's starting to turn. You can see that. What we'd like to see is the stochastic or the MACD parameters start to turn. That's what we would like to see, because that validates the underlying move, underlying pillars of the market. So far, this is good. This is the full stochastics, which we follow all the time, and that is still a rounded bottom, still looking like it wants to go higher. We are reaching some quite overbought levels. We'll see that on the daily at the Fib 50, which is massive resistance. So that's why we got this back and fill like we got today. And even then, we had multiple large winners. Just because, remember one thing and write it down somewhere in your head. Just because you get a big down day in the market, it doesn't mean all stocks are down. Look at Netflix, look at Apple, look at Amazon, look at Google came out late in the day and started to go up. Tesla, look at Shopify, look at Now, ServiceNow, one of my best favorite companies. Look at Trade Desk, look at Livongo, which is a mini version of Teladoc. Up 10%. Calls were given to you guys at $1 to $2. They went to $6. 1 week. LVGO. And I'm just showing you some selected ones. There's there are lots of them. I can't cover all of them. Look at Documentum. Look at Zoom. Look at Teladoc. I repeated that. AMD, one of our favorite stocks to trade. I always have some AMD on the side. I had asked people to buy the April 1750 calls 2 weeks ago. Those calls were 40, 50, 60 cents. They went to $2. Look at Etsy. And we're going to get into Roku tomorrow, I believe. I missed that one today. Then they came up with guidance, which was higher than expected. Why not? Square, moving higher. So just because you have a large down day, don't let your brain, the demons in you said, oh my God, we're down 500, we're dead. No, you got to attack the market like a sniper, like I said on the previous webinar. And like a sniper, you got to look around and see who you're going to take out, right? So that's what stock selection is all about. I do the hard work of doing the selection. Of course, you guys can have your ideas and certainly present it to me. I'll certainly take a look at it, and if it fits my parameters, I'll certainly put it up there. I call it member suggestion, as you know. So feel free to do that. FedEx, another one. Fantastic. Lots of room to move higher. So this is your weekly. So far, so good. We're looking okay. Best case scenario, based as I can see on the weekly, this is where we broke down, and that is at the 2,900 level. That's a lot of points higher, guys. S&P at 2761, we go to 2,900. That's 140 points, 240 points from here. Oh my God, that's another like 1,700 to 1,800 points on the Dow. I'm like, that'd be too good. But just let's look at this line. This line is around 2880. So we still got a couple of hundred points to go this week. this week, and that will be just this green line. So get used to looking at charts. Charts will give you more facts than all the fiction that you read out there, all the idiots that you listen to on TV. Well, most of them are, some of them are not. And all the gurus out there on all the different stock forums that you guys follow or other people follow. That's okay. Who'll give you their opinions, their emotions. Why not just focus on the charts? You have to have initial cognitive bias, of course. You can't be waking up every morning thinking we're all dead. You got to get up and think with some level of positivity. So, of course, my cognitive bias is I'm optimistic. I believe that we can recover from anything. I'm a survivor of 9/11. I know what pain feels like. Okay, so the bottom line is that even after that, we rebounded back. We'll conquer this too, except this is more of a dangerous situation because it's an invisible enemy, the coronavirus. And people are futzing around thinking it's a joke and spreading it more, which is terrible. So anyway, so that's it. So we still have room to move, so this is good. Let's not get too detailed here. The next one is, we're zooming in more here, is the daily. Now, question I always ask you guys, what's your first impression when you look at this chart? Does it look like it wants to go higher, or does it look like your first impression that your eyes see within a split of a second? Alan, type in. What does it look like? It wants to go higher or lower? I didn't ask you for patterns, Alan. I asked you, do you look exactly? Okay. Sorry about that. I just said to like, okay, V or maybe a W. It's both. It's both. I don't like V's. I like more inverted head and shoulders, which is basically more of a W pattern. We don't actually have a real W pattern here. This is more of an inverse head and shoulder. Here's your left shoulder, your head, your right shoulder, and then a breakout. This is not a W dragon bullish. So saying all that, you guys, you two out here, Mr. Ray, what do you see here? Does it look like it wants to go higher or lower? Just asking.
Higher.
Okay. And Mr. Nino?
I would say higher.
Okay. So basically, higher doesn't mean it's going to go all the way here. As traders, we're just looking for incremental highs. That's how you got to start thinking in your mind, okay? Not like, oh, you know, I want to go up like another 900 points. No, not like that. We want to break out over this dotted line, and that's the 50 the Fib 50, Fibonacci 50% level. I said we would get to the Fibonacci 50% level on the second day of the turnaround because we had the doji and then we went. You guys all remember that? Listen to my video. No BS. I said we'd get there one way or the other. We would get there. And each candle is 1 day. So how many days did it take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. On the 13th day, hallelujah, we went past the promised land, which was the Fib 50. On the 14th day, which was today, on Friday, we did this. We kissed it again. And on the 15th day, which is today, we opened down big. For what? For nothing. What was the reason for opening down big today? It was good news on the weekend all the way through. It's the markets. They're run by algorithmic high-frequency trading programs that are in the business of making your brain mush. You don't believe that? Why don't you ask yourself on all the screwed up trades that you didn't take or did and sold at the wrong time? They're in the business of making your brain mush so that you're not in that position. Because if everybody was in that in any particular position, leaning one with the other, the machines will try to get you to get out of that position fast. The good news is the majority of people are scared, bearish, terrified, sitting there looking for multicolored diapers on Amazon or Walmart and basically making excuses, which is fantastic news for us. You think I'm kidding? More the negative sentiment out there. And our friend Paul here, who just joined us, knows very well. Send me some fantastic charts on the sentiment indicators. Hi, Paul. Knows very well. Look around you. Go to the forums. Everybody's bearish. Show me a real bull or a tactical bull. Very few. Look at yourself in the mirror. You're not really bullish. In the old days, we used to say one thing, and I used to say, we're doing the talk, bulls are doing the talk, but not walking the walk. You might say, hey, I'm bullish, but are you really taking any nice positions on different great alerts that I'm putting out there? Not really. So you're doing the talk, but you're not walking the walk. You guys understood what I just said?
Yep.
Exactly. Because behavioral finance is a key component of trading. So that applies not just to retail traders, that applies to fund managers and everybody out there. Look at the idiots on TV. Do I normally like to berate those guys on TV? No, they're all hardworking guys making crap loads of money for calling the market wrong every single time. So they're idiots. So look, all of a sudden they're like, yeah, it looks like we're not going to retest the lows again. Like, dude, you've been in the business 40 years. You're running your own hedge fund, whatever, and you're giving us garbage? I only listen to it because I want to know what they say. It's good to know because a lot of people listen to what they say. Even now, like, yeah, don't be surprised if the market retests a low. Sure, the market might retest a low. That kind of black swan event happens all the time. But where would they? Telling us to buy like we did at Clueless A Trading down here, even when it fell. I remember we're down 900 points. And I said, guys, technically nothing changed. Listen to my videos. I don't want to repeat myself over and over again. So this stochastics are moving nicely. And this looks like more, even though there's danger here, but this looks more like a cup and handle. And look what happened. Bang, the market went up thousands of points after that. Am I a genius? No. Maybe I think differently. Maybe I read the charts better. Nobody's a genius in this business. Geniuses don't make good traders, just so you guys know that. All right? They don't. It's the guys who move fast and the guys who take action and seize the moment. Those guys and gals make the most money as traders. Traders are not Oxford and Harvard PhDs. They make the worst traders in the world. We don't need excessive analysis paralysis. We need action with some quantifiable risk analysis so you know what your downside is and how much money you can make on the upside. Sometimes you can day trade, sometimes you can swing trade. And the market will always throw curveballs at you. Just remember that, always. So be prepared for that. In the meantime, this does look like it's going to go higher. How much higher can we go? I think best case scenario, we get to 2871. So here we are right now at 2760. If we go to 2871, this green line here, that was a point of congestion, a point of supply. Big selling came in here, big time, right? Markets couldn't rebound further above that. Attempted it twice, failed. So I look at that number as something that I would give some respect and credence and realize that that's the point where there's going to be some heavy duty selling. So bottom line is from where we are right now, which is 2761, all the way up to 2870. So let's call it 100 points. That's another 800 points or so on the Dow we can have. There. That's a lot of points. You know where Apple's going to be then? It's going to be at 280, 282. Netflix will be at 420 to 430. Amazon will make a new high. Make a new high, okay? Shopify will be at 500. ServiceNow, which is at 286, will be at 350 or 340. Documentum will hit 100. Zoom, well, that's kind of like back and forth, but hey, might hit 150. It's at told you guys to buy it all the way at 117. It's at 138. Somewhere around there, I told you guys to buy it, like at the lows the other day, last week. So FedEx will hit 130, 132. That's 800 points on the Dow. So as a trader, don't you want to make that money? Of course you do. What are you going to do? Get up here and say, oh, no, I really want to buy? That's what the majority is going to tell you. Oh, now we hit there, we're going to go higher. No, 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 no. Maybe we'll overshoot a little bit. It always happens. Just the way we undershoot, we'll overshoot. And bang, they'll pull the market down. And they'll all cry the same thing. Oh, wow, we're going to test the lows again. And all it's going to do is create a large cup and a handle. A large cup and a handle. And that handle might bring us down to 2640 because that was the neckline we broke out of, or 2700. Those are necklines. These are necklines right there. That's why we excel at what we do here at Clueless Trading. And we don't make it overcomplicated and over sophisticated. And that's exactly what's going to happen. Now, why do I say it with so much confidence? Because I've been right so many of times. So of course I have some confidence on saying. Now, will that do it at our own pace and time? No. Maybe we'll slip and slide here and come down 300-400 points over the next 48 hours to 2640. But unless this level breaks, which is 2640, make sure that I'm reading this right. Yeah, like 2640, 26 around this level, we are fine. We are fine. So you can short intraday the SPY puts or any other instrument that you want to use on the short side. But you better not go to bed with it, because if we come down here, the market will, barring any other second black swan unquantifiable event, will bounce. And in the meantime, that's the semi pullback scenario. Okay, are you guys with me so far?
Yep.
Yep.
Exactly. You see, one thing for a lot of the new people who are here, Alan, and other people who started with us recently, we're in the business of predictive analytics. So what that means is, if we say this is something we are projecting will happen, I would say 8 out of 10 times, if not more, it does happen. But when there is that notion of it might happen, this is why I think the technical reason, there is a bit of disbelief. Yes or no? You understand what I'm saying? Because it hasn't happened yet. So that's the way it works in life and in business. Because there's a disbelief. Oh, well, what if it doesn't happen? He might be right, but hey, he's wrong. So what happens is you sit around and you do nothing, and it happens. And that is called quantifiable risk speculation. You always have to have risk. Options are risk assets of the highest order. That's where you're playing with small money to get 200, 300, 400, 600% on your money. If you look at the Amazon calls, which I unfortunately weren't in, the 2,200 calls, they were up 1,530%. They were up from $1 to $23. How rich would you be? So we missed that. Okay. What about the Tesla I asked you to buy? What about the Netflix? 800+%. Okay. So bottom line is that you got to go with some level of speculation, and this looks like there's going to be, there's disbelief. That's fine with me. Doesn't matter. Like they say, thank me after the trade is done. But this looks good. This looks good so far. We might pull back. Lower end of the channel is 2,700, 12. That's why you have a line here. That's why learn how to read this chart. It's not hard. There's a red line here. What does that mean? What does a red line mean? Nino, what is a red line?
Resistance.
Bullshit. Support. I think,
Oh yeah, my bad.
Yeah.
That's what I meant.
No, that's not what you meant. Okay? Don't say, never make these fundamental mistakes. It's like asking you, like, I don't even have an analogy for that. That's a dangerous thing to say. That was resistance when we were down here, but now it's become support. Got to get these things straight in your head. All right? And the upper end of the best case scenario, what I'm thinking is 2865. And it might just blow up over that. So bottom line is these candles are all good. Let's go in a little bit closer. Now, this is overbought. The stochastics are overbought. So if they start to curl down, that's when we're going to get that pullback that I'm telling you about. So I'll be watching this very carefully. Now, in the meantime, as traders, we look to see, I constructed this chart today for you all. Now, if I put out a chart and say, draw your own arrows, do it. Do it. Print it, screenshot it, and draw your own arrows. This is a real volatility, algo HFT, algorithmic high frequency trading volatility chart. It's not a VIX chart. It's the market. Look at this market. We actually hit the 28.15 level at 6 p.m. yesterday after the Globex futures opened and there was a big spike in oil. When President Trump got the Saudis and the Russians and the Mexicans to basically say, okay, we're going to cut about 10 million barrels. So the market originally spiked and then crashed down at 6:15. So get used to looking at this because this is going to determine what you're doing on the front side. Are you guys with me on that?
Yes.
Yeah.
Good. And don't just say yes, practice it. Practice what you're telling your mind. That's why I don't freak out. You ever seen me freak out? No, I don't. Maybe that's where I am. In life, I don't freak out either. I've gone through a lot of stuff in my life. Maybe some of you have gone through a lot of stuff in your life, I'm sure. Because if you don't go through major stuff in your life, then you're not strong. So the markets are the same way. It's a freaking heavy-duty volatility chart. I looked at it. I looked at the patterns. I looked at the consolidation triangle, a large one. And I said, okay, let's do this. This is the bottom, 2,700. And this is what the market did all day. Each candle, 15 minutes. Makes the average trader jump around like a monkey on a hot tin roof till they fall off. What does it do for us tactical traders and all our members? Keeps them grounded. So now, let me ask you guys a simple question because this is important feedback. Alan, you can type in, when you look at this chart, you can pretty much, can you pretty much see exactly what the markets are going to go to if they go on the upside or the downside? Yes or no? Okay. And Mr. Dino, when you look at this chart, you know pretty much exactly what the machines are going to take us to on the upside, where the selling's going to come in a bit, and where they're going to take us to the downside. Do you agree with me or not?
Yeah, I agree.
Okay. And as long, I'm going to draw another line. And as long as we hold these major supports, the market's going to go higher. It's really as simple as that. It's really as simple as that. So let's say example, we moonshot tomorrow because JP Morgan actually basically guidance wasn't that bad. Let's put it this way. Paul, is it JP Morgan tomorrow? I'm going to check on.
Yes, they are. And Johnson & Johnson and JP and
Yeah,
another.
Tuesday, April 14th, right there. So there you go, sir. Johnson & Johnson. I use briefing.com for all this stuff. Johnson & Johnson, JP Morgan Chase, Wells Fargo. Well, forget Wells Fargo. Nobody really cares about them. Infosys, interesting. Okay, so Johnson & Johnson and JP Morgan are going to be tomorrow morning's big thing. United Airlines, after the market, JB Hunt, very important, ground transportation. Washington Federal, somewhat important. Anyway, we're going to go through earnings and we're going to highlight the ones we're going to be playing. So bottom line is, and like an idiot, I didn't get into JP Morgan. Whichever the case, we'll always have a chance tomorrow. So it's going to be, go back here. Okay, so this one. So let's say JP Morgan, and then boom, the markets, the hedgies started buying it. We might open up here. So we are right now at 2764, up 5 handles on the S&P 500. If we open up here, somebody please answer, somebody new. El Nino, you're learning fast. If we open up at 2779, call it 2780, no, 2779 from where we are right now, how many handles is that? we're at 27.64 right now, and we are up 5 from the close. So if we open up here, because JP Morgan will be reporting pre-market, how many S&P, how much will the S&P futures be up? Come on, simple math here, guys. Come on. We're at 27.64. We're up 5 points. If we open
14.
up here, so no, see, you failed again. You got to think, you got to, as an option trader, your brain must work fast. I already told you we're up 5 points. So you got to add the 14 to the 5. That means from the close today, we would be up 19 points on the S&P 500. Do you understand what I said?
Got it.
Exactly. See, if you don't have these simple things cleared out in your head, you're going to screw up in trading options. Just telling you straight out. So this is 19 points. Let's call it 20 points. But the good answer, half correct, but that means it's wrong. So bottom line is 20 points. So if we open up 20 points, is it like giddy up, like, yeah, everything's great? No. That means stuff that we bought today on the cheap will be up. You'll be up very nicely on a bunch of different calls and such. So then it makes sense to sell a bunch at if we're up 20 handles on the SPX. Like I say, always sell full or partial profits at gap up opens. After this, if it hits here, this is a big supply point. This is where the machines will sell. It'll probably back and forth, back and fill like that. And then if it wants to go, it goes. The next, this dotted line is a gap fill, actually, believe it or not, 27.87. Pretty simple. You open up 20 handles in the S&P 500, it's obligatory that you sell some profits. It's free money for sleeping, for getting a good night's sleep. Just like Netflix and Tesla today, and Shopify, and Zoom, and even Teladoc. It was up a lot as the day went by. So that's how you do it. Now, what the emotional traders do, they're like, oh yeah, I'm really gonna buy here right there. Okay, very exciting, good. So they buy right here, and boom, the market comes down. They're like, what? And then they sell here, and then it turns around and goes higher. How many times you guys seen that? That's normal procedure, because the algos know exactly how the average human trader thinks. How do they know? They see their actions, they see their stop limits, they see, where they're buying, where they're selling, where the clusters are. This is not grandpa's world anymore. This is a world of artificial intelligence, self-learning black boxes, supercomputers. They can analyze you before you can even say hello. So we do have a lot of upside, but it's going to be just like every other day, volatile. So this is a very important chart. Keep an eye on it. Next one is one of my older charts. Again, I believe it's a 15-minute. This goes all the way back from the top when we were at 3,400. Wow, when the world was not coronafied. I'm half kidding around, but it's terrible, man. Can you imagine, like 2 months, like the world changed? It's crazy. All because of bats. I don't want to get into that. I went off on a rant the other day. Really makes me angry. So anyway, so this is where we are. 50 on this one is right here. We're kissing it again. 28.83 is my short-term best case scenario. So as we approach this, because you can see here very clearly, it's called pattern recognition. One second. I'm starting off here. I don't want to go all the way up here. Lots of inverse head and shoulders. Range trading, like I told you, we'd be trading within a range. We broke out of the range. And we are here. So I would say best case scenario, 28.38 to 28.83. It is a full intermediate pattern completion. Do you guys see what I'm showing real fast?
Yes.
There you go. There you go. And the machines will find some excuse. There'll be some headline. There'll be something, believe me. The market is totally rigged. Except the rigging now happens not from one little cabal coming on the 50th floor of Goldman Sachs or something like that. It's coming off the machines. That's the funny part. Welcome to the Matrix, guys. This is no joke, all right? They'll find some reason, bang, they'll bang the market down. It'll be another cup and handle with a neckline retest here, this big green line at 2700, 2700. So if we fall from 2883 to 2700, that's 183 handles or points times roughly 8. That's 1,500 points on the Dow. 1,500 points on the Dow. And it's going to be very fast, very furious. And we'll see if it holds here. If it doesn't, then we got to look at the lower numbers again. But I think this pattern, which I'm drawing out clean here, gets up here and then pulls back. Tactical roadmaps, predictive analytics. 80% probability it's going to happen this way. Now you know it. How you handle it, that's where the hard part comes in. Okay, let's see here. Last chart is a white screen with a lot of cups and handles. Hold on, clean this out. So this is one which is a 15-minute charts, a little bit modified. That's AD line, MACD, and then you have the stochastics. But let's look at this here. To me, this is a rising wedge right there. Let's make this line thicker. Right there. Right there. There you go. Pinnacle of the rising wedge right there. The apex is 28.55. When the markets opened today, we were at 6:15 in the morning. That was last night. The markets opened. We were down quite a bit, and then the markets opened at 9:30. We were actually only down like almost going positive. Well, Paul knows that. And then we opened up at 9:30, 9:45, right there, 9:30, right there. And we started immediately selling. Bet you a lot of people freaked out. I showed you guys these charts. I was off by a couple of minutes posting the alerts, put it out there. I showed you the levels. I said, if it crosses this, be careful. That's when we can short. And look what it did. The market obeyed clueless day trading charts. I'm serious. It did. It certainly did. Look at it. It touched. No one can say, oh, stop it. You know, you're making up stories. Okay, so why don't you look at my charts? How am I making up stories? This was the support pre-market. This was support back on the 9th. Big support. And I said, and I even drew arrows here. This is the this chart does not have the arrows. Look at my Twitter feed, which you all should. If you don't, that's your loss, not mine. I drew the beautiful little blue arrows saying that support, and that is, there's your trading range, 2780 or 2779. And there's your range. So once you start looking at the market in this type of matrix, which is not really that hard because I'm doing all the hard work of constructing it, it'll make your life a lot simpler. You're going to keep more profits. You're going to lose less. You're not going to do stupid things, and you're not going to ask, the stupidest question a trader can ever ask? Hey, is it a good time to buy? I'll say, hey, why don't you buy a lollipop and take a walk in Central Park? It's a beautiful day. And by the way, get some cotton candy too. A real trader never says, oh, is it a good time to buy? Okay? You look at the charts and you say, is the profit potential better if I buy it here? There is never a good time to buy or a bad time to buy. The good time to buy is everybody and their grandmas and their grandpas are all crying together and hopefully not sharing diapers. Oops. Okay? Seriously, good time to buy is when the markets are down 2,000 points in one day. That's a good time to buy. When the markets are getting up here, you want to buy tactical ranges, you're buying the tactical lows. That's a good time to buy. But I know traders sometimes ask me, is it a good time to buy? Please don't ask me that question, man. Okay, because 5 minutes later, if the market pulls back, then it's not that good time to buy doesn't become a good time to buy. Do you guys understand what I'm saying?
Yeah.
As long as you buy within a low range, that's fine. Don't have to exactly hit the bottom. Who the hell am I? I mean, very seldom do I catch the exact bottom. I have quite a few times though, because I'm kind of a nut. Because my charts are so precise, I dive in exactly at that point. But the movements are so fast in the market, I can't get that lowest price. You know how it is. So this is still good. So if we retest the pre-market Globex highs from yesterday evening, 6 o'clock, 5:45, 6 o'clock when Globex started. So that's 28.17. I'll be more than happy. Futures, gentlemen, are about 10 points right now, just on these small candles. So that's it. That's your tutorial. Now, what are we going to look at next is the ultimate contrarian indicator known as the VIX. The VIX on the weekly is still telling me that we are going up, up, up. I've shown this. I'm repeating what I've already put on the Twitter feed. And if any one of you haven't seen it yet, then I don't know what to say. Do not, I see, be very straightforward. Note, there's absolutely, don't waste your money on my service. If you do not want to make money off these precision charts, and more importantly, if you do not look at the Twitter feed, I don't care how busy you are during the day, you can always spare 15 minutes and look at it on any mobile device that you have. And the more you look at it, the better off you're going to be as a trader or an investor. Okay? I'm not even going to bother asking if somebody took a look at it or not. This is clearly telling me on a intermediate term basis, given let's say 4 to 6 weeks, the markets will be higher because the VIX is pointing lower. Now, the VIX here is going to reach the pivot. This dotted yellow line is called the pivot. And the pivot normally is a bounce zone. So the VIX hits around 39.64. You could expect a bounce on the VIX. If the VIX bounces, you know what happens? The market falls because the VIX is a contrarian indicator. By now, all of you should know that. There's a gap down here. Will the VIX get down to 22? Maybe. When? Next week? Absolutely not. Let's not be stupid. Maybe in sometime in May, maybe in June. It can. And the markets could be up to 3,000 plus because the virus has been contained. Of course it can happen. Now the VIX on this is your bigger, longer term picture. It's telling me the market still wants to go higher. It's not going to make you money in the short term, okay? Because in between there's going to be a lot of zigzags. Each candle is 1 week, and a lot happens in 1 week. This is your daily. The daily is telling me the VIX is starting to bottom. The stochastics are bottoming. What is it telling me? That sometime by, who knows, by Wednesday or so, the market will pull back on Wednesday. I've been dead right on these things. Talk about crystal balls, you're looking at it. Not my face, the charts. Focus, okay? Because this is telling me that the stochastics, and when stochastics get this oversold, it always, 90% of the time or so, turns. What's this? 1 second. Okay, that's better. And so I'm really like laying down the ground or spoon feeding you guys, as I always do. I won't change diapers for you guys, but I'll spoon feed you. How about that, guys? All right. So that's what I'm doing right now. So this is going to bottom a little bit more, and then it's going to curl up. And when it starts curling up, the markets are going to fall. And then the bears are going to come out of high again, because they're losing money right, left, and center, right? The bears even lost money today. So the dogmatic bears, the ones who are like, hey, we're short-term bears here and there too. But you see the dogmatic bears on the different forums, Stock Twits and other places, they're like, timber, it's over. I'm like, God, And then they start insulting other people. I mean, seriously, you know, we have no civility left in our country anymore. Then they started pissing off other people. You moron! You do this, you do that. I put up a chart and I get one guy to say, hey, you do, yeah, right. I said, okay, thank you very much. Goodbye. Block. I have 33,000 followers or something like that on stock tweets. I don't even post charts there. Maybe once every 2 days. But whatever I post, obviously, you know, people like. And a few comments. Sometimes I slap people around big time. I don't call them stupid names because that means you're down to their level. But that's what these people do all day long. Like, why do you have to be dogmatic? Why do you have to be a fanatic? Why do you have to be an extremist? Bearish and bullish. You don't need to be an extreme bull. We're not extreme bull. We're tactical bulls. We're not saying off to the moon, new highs. Okay? Why can't you be like a tactically bullish, moderately bearish, based on circumstances, based on the charts? But no, they have to be like one way or the other, one way or highway. US is finished. Look at the deficit. Oh my God, they're printing money. Yeah, why don't you give me one of those printers? President Trump knows nothing. Federal Reserve Powell is an idiot. We're drowning in debt. Hello. Oh, yawn. I've been hearing it for what, 20 years now? We're drowning in debt. Sure, we're drowning in debt. It's our own debt. Jesus. And I know some of you think like that too. So good luck to you all, okay? Stop being dogmatic. So bottom line is it'll turn and this will come down. Who knows? Maybe it'll come down below below 35. I mean, I have some lines drawn here. And then boom, all of a sudden it's going to go like this. That's called a falling wedge pattern, just the way like stocks. Well, like this, everyone's like, oh, it's always going down. It'll never come up. And boom, it goes. So we follow this. So I haven't seen any turn on that yet. I would give it 48 hours. And I think we get smacked on Wednesday. So just letting you know. 1 second. Erase. And this is the shortest version of the VIX, which is the 1 hour chart. And it looks like crap, but it's getting oversold. Every time it bumps like this, you hear, oh, we had a rally. Everything fizzled. Looks like we're back to testing the lows. It's just like, oh my God. And this comes from smart people, mind you, or so-called smart people. And that would be just like 1 or 2 green candles. It's an overall downtrend, for God's sakes. You can see that clearly. Or this was today with the 500-point drop. The VIX went from being 41, went to 44. Oh my God, we are drowning. We are finished. And the markets erased most of their losses. And more importantly, stocks went the other way. Big time. Now, this is a mixed chart. It's telling me, yeah, we can pop up a little bit more. JP Morgan really craps tomorrow. We're going to pop up again. To back to was 44. Markets will be down 300. And we're going to still make money on certain stocks. Any questions? Yes, no, maybe. The rest of my stock charts are rest of my tactical charts. Those are off the quad platform, QUODD, are on the end of the day chart. So feel free to review them. Feel free to read the 1-line comment. Doesn't take too long, and I think you guys will understand what's going on. All right, so let's look at stocks here. Any questions, please, while we hit some stocks here?
CDLX, Frank. That's coming up on the 17th.
Yep, CDLX is a biotech play. Certainly a real popper, if it can be. 1 second here. Those are not day trading stocks, even though the stock moves. So let's take a look at CDLX. CDLX, we are going to look at the bigger picture on that stock. Bigger picture on the stock says lots of headroom to move higher. I mean, lots. Okay, there's one gap fill, basically the promised land, which starts off at 60 and ends at 83. This is not a stock that you trade on a daily basis. This is a swing trade, and you want to buy calls out and out. If you are this week's, which have diminished in value, you got to buy May, and you can go as far as June. This pattern here, and these are biotech companies, obviously, they don't follow the market in their own version, was a $107 stock. It is definitively a W pattern with a minimum of 50, with a maximum of 60 to 60, 30, 35, I mean 62, which would be the lower end of the gap. This is not a stock you can rely on to go up every day or every week, but the patterns are very clear. This is not, I repeat, a market related stock. This is related to its own stuff that they're doing. They have a lot of things in the pipeline. So that's the story with CDLX. Cardlytics. Okay.
Okay, thanks.
Let me, Nino, any one of them that you want to see? As time goes on, that's a very good one. Let me answer. That was Ray who asked the question.
Yes, Frank.
Yeah. So one of the things you'll find out as you become more used to trading and looking at stocks, that that stocks come in all shapes and sizes, right? So each of them have their own characteristics. So that's why they like lumping all your money into one. Yeah, you might win out in 3 months, but then you might lose because you're so stuck in one or two that you don't shift your money around, and you miss out on all the other ones like the Teslas and the Netflixes and stuff, and the Roku and everything, which are like going nuts, or Zoom or Teledoc. So you always have to somehow figure out a way to have that other cash to work with it instead of all lumping in, which some traders do, especially when they're new, into one or two, and then it doesn't move for 2 weeks, 3 weeks, and then they take off and they sit around and say, oh God, I could have made this or that. Do you understand what I'm saying?
Oh yeah, I've already lived through that, so I figured it out.
Okay, that's good. That's good. So Nino, go ahead with your question.
Yeah, can we look at APHA?
APHA? You're still, oh wow, this
Yeah,
is the, yeah, this is Afria, the pot stocks, right? So looks like it's moving. Look at that. You know, this was December. I mean, this was the bottom of the market. I had Afria drawn from a while ago. Oh, that's what it was. See, I don't know much about these companies, but I know pot stocks got hit really bad when Corona hit. This was already drawn, so I'll just show it to you. The stock can go to, you know, it's got a nice move. It can hit 467 percentage wise. That's like a lot. What's 167 over 347? That's 48% just to get up here. Yeah, it's definitely good. It's got room to move, no question about it. There's nothing wrong in the technical picture. There's nothing wrong in the technical picture. There is a powerful. This was the previous support, right? 372. So it needs to break over 372 in order to hit that 4 level. So still pretty good. Still pretty good. Yep, it's definitely coming off the bottom. I don't understand the fundamental of the dynamics of these stocks, so I can't really comment on them. You know what I'm saying?
Yeah, me neither. I mean, I played the last bounce and made some pretty good money, but thinking about getting in again.
Yeah, that's smart. That's smart because these are cheap things. You can buy them like options. You just buy the stock, right?
Correct.
Oh, that's awesome. No, that's awesome because right now it looks like 4, even if it's, you know, 373, $4, and if it hits this big downtrend line, that's 483. That's a lot. 50% on your money, you know, it's no joke. So pretty cool. Technicals all fine. Technicals are all fine. Paul, throw a stock before I show a couple.
I'll throw one out there that's kind of, yeah, maybe, how about Virgin Galactic, SPCE?
Yeah, I haven't really tracked that lately. So Virgin Galactic weekly looks like this.
I kind of feel like it's being brought down with the other airlines. I mean, it's not even a full-fledged, business yet.
You're totally right, because the stock was doing quite nicely, to say the least. And I think one of the things is that maybe because of this coronavirus crisis, maybe their plans are delayed, so their profitability will be delayed. You understand what I'm saying? Maybe that's what they're thinking. I don't know. Maybe more people are going to say, hey, I don't want to be. I personally think, from a standpoint of shorting it, the stock definitely has upside. There's no question about it. And let me see here. 22. Wow, that's a lot. Yeah, there's definitely upside, no question about it. And I would look at the 18 mark. I'm not changing color, so everything's in red. I would look at 18 mark as a trading range. Lower end of the channel is 13. Any break of 13, the stock's going to fall hard. But right now, it's got room to move. It's definitely got room to move. It's hugging the yellow line, which is nicely curving up. That's a 5-day moving average. I would say the stock can hit 17. And I think that this is the kind of stock I would play on earnings. But that's just my opinion. You know what I'm saying? That's your daily chart. Yeah. Otherwise, looks pretty damn good. Let me throw in Roku. Now, this is a stock which is heavily played by retail, and these are all charts that were constructed way back when we were heavily trading Roku. And they issued upside guidance. Now, one of the small things you have to remember, very simple. Companies which issue upside guidance, and then they say that the revenue is going to be higher than expected, blah, 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 but they won't issue third quarter guidance because of COVID-19, understandable. But the minute they say, hey, we made more money than what you guys thought, the stock's going to pop. So Roku is popping after hours. I believe it was up anyway today, or I wasn't tracking it. Stock is up very nicely after hours. It was 92, and the stock is right now at 107. So the stock is basically here right now. Right there. It's crossed over the 50-day moving average. Roku is heavily traded by hedge funds. Mutual funds love it. And Roku is a beneficiary of stay at home. It's not really much to think about it. So I would say that based on my previous work here, there was a gap fill here, a gap fill. It's already above the gap fill right now. It's at 107. It's here. I would say the upper end of this gap fill is, I should have marked this. This chart was drawn a while ago, by the way. But it always stays like that. 116. Let me do this. Roku calls get pretty expensive, just so you know, the minute it starts moving like a monster, because that's what it does. So just be careful of that, okay? They're no longer like $2-3. They're like $5, $6, $7. So the upper end of this gap, I believe that's what the stock is going to go, is 118. Very playable. Very playable. If Roku keeps on going, you're looking at the stock getting back above the 150 or 200-day moving average. So you're looking at 125, 130. This thing is going to move very fast, ladies and gentlemen, very fast, starting tomorrow. Their guidance was pretty solid. Right now it's here. It's going to pop open. Shorts are always in Roku. Big fat short squeeze. Stock was going to hit 120, 125. So that's one, okay? So get ready to play some fast trades on this. And they have cushioned themselves by saying the numbers are going to be better than expected. Shopify, very highly valued stock. It's just moving like a monster. So what I do is I keep on buying the upside calls, because I told you guys to buy it, if you guys remember, pretty much here around 325. Within a matter of 1, 2, 3, 4, 5, 6, 7, 8 days, the stock hit the downtrend line at 470. Mind-boggling. I told you in my previous webinars, these are monsters. This is Amazon Junior. Okay? They're serious. And they also issued guidance. And they said the numbers were going to get better. And the stock still fell that day. Remember, it was down 34 and I said, let's go buy it. Exactly. Some of you remember. Because I read through it and I said, the guidance was better, but they said they won't give forward, they'll remove guidance from the third quarter. Fine. Or second quarter, fine. But the numbers were better. The stock fell like this. And then just started running. So right now it's crossed over. These dotted lines are all gap fills. So again, these are really for active traders or swing traders too. You can buy way out of the money, wait for their earnings. If the earnings are good, the stock's back to 500. Remember, the stock was $600. It went from 600 to 300, and Goldman Sachs downgrades the stock. Oh man, there's a height of moronic behavior from an analyst. They downgrade the stock at the bottom. 600. I believe the stock will go to 500 by earnings. So buy some cheap calls at 500. Leave it there. That's the way I would play it. I wouldn't pay that much to buy in the money, or if you do, you better be prepared to like put in some hefty money because the calls are expensive. So buying out of the money still pays the bills. I had 450 calls. They were still up 120%. They went from $5 to $14. Why not? Are you guys with me so far?
Yep.
Yes.
You guys hangry? Hangry yet? Hungry and angry? That's the way you got to be as a trader. It's a big money making potential. Big money. Not like, oh, I just made like $200. No. Think big. With small gets big in earnings season. Small gets big in earnings season. Mark my words. How many times have we bought calls at 2 that we sold at $9, $10 on earnings? And some of them we bought at 2 went to 0. So which one's better? The 2 going to $9, $10 or one from 2 that goes to 0? One is making you 4 to 5 bagger, 400 to 500%, and the other one you're only losing 100%. Does everyone understand that concept?
Yep.
If you buy a $2 call and that earnings bombs, you go to 0. That means you lost 100% of your money. Okay, you buy that $2 call, and this has happened a lot. This is going to happen with ServiceNow. That's my conviction. This is what will happen with Shopify. Shopify has to stop running up like this. I would want Shopify to be down $30 before earnings. That's when I would be like, yes, because it keeps on running up. It's already valued all the way up there. They have to do something extraordinary for it to go higher, because trading and options trading or any trading is an expectations game. So the least you expect from the company and the little that they impress you, it goes nuts. Under promise and over deliver. Understand what I'm saying?
Yep.
Yeah, exactly. Under promise and over deliver. That's what companies need to do. So I hate stocks that run up like crazy into earnings, because they miss one little thing. Even though earnings were great, they drop at 40 points and then they'll pick it up and run. So if something $2 goes to $10, you just made yourself 400% in profits and 5 times your money. Okay, it's a 5 bagger. Here, you only lost the 2. So 2 goes to 10, and here 2 goes to 0. So if you did a straddle, you bought one put at 2 and one call at 2, you made yourself $8, and you came out a winner. That's how you got to think. Mental calibration, ladies and gentlemen. Time to completely take all the old emotional bolts out of the head and put some new bolts in. Hydraulics. That's how you got to think. That's why earnings, what we call ER trades, in my opinion, buying small, buying, one call here, one call there, buy the basket. Don't have to go nuts. ER trades and the basket strategy, ER trades and the basket strategy that I show, and I do my best selection, and I'm pretty good at it. Okay, you guys have seen it. Ones who have been in it, they know the joy of a thing going up $30 and you sell your calls right at the pop at up like 300%, and then you see it run up another 300% during the day. It's happened to me. You can always get in. Sometimes I sit there and say, why the hell did I sell it at open? Because it was free money. Do you, ladies and gentlemen, understand that?
Yeah.
Earnings are the best ways. People say, "Oh, I never play earnings." Okay, that's fine. I'm not your, I'm not your daddy. I'm not going to tell you what to do. No, I don't play earnings. There's too much risk. Oh, really? There's not too much risk in the market on a normal day? That's a bullshit excuse. It's a 50-50 chance. So what? I have grown small accounts into pretty nice sized big accounts. Some of my members have too, just playing earnings. I'm not pushing you guys to do anything. I'm just telling you the facts, not the fiction. So, oh, I'm not going to play earnings. I'll buy it after earnings come out. Oh, yeah, really? Because the stock will be up 20%. That's when you're going to buy it? Really? That's really smart. Now, a lot of times in earnings, we get reversals. They bring it down. The hedgies and the algos, they know how to, screw around with people's minds. So they bring it down hard after hours, keep it low pre-market, and then the market opens and it kind of recovers. And we have done a lot of these, and boom, they take it up. And you're like, what the hell happened? Welcome to the world of market manipulation. Happens a lot. We call them reversal trades. Get ready for those. And if you sit there and watch these go by and never try to do one, a couple here and there, then I call that idiotic. It's just my opinion. We call them reversal trades, big money trades. We have had 40-cent calls literally go to $4, $10 in a matter of 24, which is the same day, or 48 hours. And you'll see it again. But don't just be a spectator. Trading is not a spectator sport, guys. It's a engagement, contact sport. And I know all of you guys are tough guys, I'm sure. So be tough in trading. So we're going to be doing a lot of ER trades, basket strategy. Always be involved in some. Doesn't work? Okay, feel like crap for 10 minutes. Move on. That's what I do. So I like this one a lot too. Apple, I showed Apple's chart. I don't want to, Did anyone see my Apple chart that I put out there right after I told you guys to buy it? I didn't even buy Apple at the bottom. I bought it as I started to see the technicals flash yes. It went nuts. I showed two charts on Apple. Okay, I told you guys to buy it at like $3. It went to almost 5. That's almost 60% in a matter of 25 minutes. So any of you sitting there twiddling your thumb, time to, take your thumb out of your mouth and start putting on the keyboard and buying, all right? So here's the Twitter feed. 1 second. Just trying to get you guys going, Trading is the only business that's going to make grown men cry. I don't care whether you are a jiu-jitsu champion or whether you can crack somebody's head in one blow. Okay, trading is the only business that's going to make you cry. Grown men and women cry. All right. Look at Apple. That's a beautiful chart. Look at the gap fill. And the calls were reasonable. I said, that's it. I'm getting in. $3 for 2 weeks. 24th. Not even this week. Bang! It went. There is the other chart of Apple I showed you guys. And I didn't hear from anybody if you saw my thing. I'm a little bit disappointed in you kids, Seriously, time to wake up. Look at this chart. Told you guys to buy it right here. Didn't even tell you at the bottom. This is a beauty. You got a triangle breakout coming up. I started telling you buy it. Boom, boom, boom. This little thing was worth 50% on your money. You want to be traders? Think and act like a trader. And don't tell me, oh, I was too busy. I don't want to hear those pansy excuses. In fact, I don't want to hear anything what people did, to be honest with you, because it's none of my business. I'm just suggesting. So I think Apple goes to 276, if not 280. Every metric looks fantastic. Look at this chart. I saw it. I'm like, God damn it. I couldn't wait. Bang, bang, bang. Did I go nuts on it? No. Did I buy a decent amount so I saw a nice fat profit? Yes. Did I sell any? No. Is Apple going to be up tomorrow? Yes. Am I going to make money? Yes. How much are futures up right now? 17. So stop feeling sorry for yourself, my friends. This ain't kindergarten. Start feeling happy for yourself. So on that note, the thing that I'm going to show you is this. It's this chart. Look where it's going. Look where it's going. Right here. I thought it was going to go there tomorrow morning. It's going there now. It's going there now. And just want to show you the magic of what we do here. Nobody can fight us in the world of algorithmic high frequency volatility trading. We are the masters of it. We are. And the more I do it, the more robotic I get. You should see, whoa, futures just jumped up 24. There we go. What happened? What happened? Anyone knows?
Futures ripping, bro.
Of course, bro. I told you it was going to, it just jumped. What happened here? It's going straight to that gap. There must be news out there. It must be Germany. I'm trying to see. Bloomberg's on the top. I'm looking at briefing. Paul will find out. I think Germany. Wow, it's going. Futures up 31. Here we go, guys. Sit there and keep chewing on that thumb because you bozos, some of you didn't even buy any of the things I told you to buy today. I know what El Nino did. I'm sure Paul did. I hope so, guys, because the market right now looks like we're going to open here. Wow, they're jumping. 30 points right now, 30. This is great. You know what the best part is? This is the finale, and I'm just delivering it to you what I just told you guys half an hour ago. Isn't this beautiful? Now it's going to pull back a little bit and test this gap again. Futures down 27. Something, let me check on one of my iPhones. Okay, 1 second. Bloomberg normally should report. So if anyone after this who's going to listen to his free trial subscriber says, no, I'm not going to join this guy. He's really stupid. I said, okay, thank you very much. Like my boy Donald says, thank you very much. Thank you. Next question, please. All right. Something happened because so far it's sticky. Isn't this nice? Isn't this beautiful? Let it go, baby. Take out those circles. Let's go next year. So we have a lot of traders. Huh? What happened?
I don't know if this is the news, but China approved 2 experimental coronavirus vaccines to enter clinical trial.
Could be interesting. I'm looking at this here. It could be because if they're working, I'm not seeing anything here. ETF investors are all in on stimulus with 17 billion stock bet. I love this. HYG, baby. My HYG is going to go boom.
I don't think that's the news, actually, Frank, because that was half an hour ago.
No, that's not the news. Something else. I know
I wonder
we're
if
going
Warren Buffett bought something.
What was that?
I wonder if any of the big players bought something, like maybe Warren Buffett is sniffing around or something.
Could be. There was an article on that too. Buffett's been very quiet. He's probably looking at things. The thing is, guys, this is very good. This is, in summary, we don't want to stay up all night watching this candle go. It might just turn blood red and, just like who knows. But the fact is, this is what happens. All right. So welcome to the world of tactical trading. Hope you guys have a beautiful evening. Take care of yourself. And the last thing I'll say, this is a dangerous market, guys. All right. It's been a dangerous market even when the markets were going up like hundreds of points every day. All I'm simply saying is there's a lot of opportunity to make money. So stop making excuses. Stop being scared. It's okay to be scared, but stop making excuses. Get involved in the earnings trades. Buy a little bit. The joy of feeling when you get that 300-400% gain the next morning, that's what propels you to take the next trade. Sometimes you make a trade so well, you don't need to trade the whole day. Okay? That's basically it. Get a lot of referrals, get a lot of people to sign up. We don't need super smart members. We don't need that because they overthink too much. We need people with grit, with risk, with some capital, and who understand charts. That's all we need. On that note, God bless you all. We'll figure out. I'll put it out there why this is going up. And this is gorgeous. It's gorgeous. Look at this webinar. I made the market go up a gazillion points while I was doing this and explaining to you guys. All right,
Right
that's
on
it.
cue.
Right on cue. All right, thank you for attending, guys. You guys are the best. Thank you so much.
Thank
And
you.
please,
Good night.
yep, thank you.